In today's video, we're going to talk about candlesticks. If you are still new to trading, it can be pretty daunting to take in all the necessary information that you need to start making a bit of money trading Forex. Now, I often say the Forex market is not a chaotic place with candles just moving up and down senselessly, but rather it moves in a rhythm. You'll notice that as the price print on our screens, it will leave behind certain patterns and very critical information that you and I can use to predict the next trade. But we can only benefit from this information if we know how to read and analyze this information. And candlesticks are the ABCs of the market. If you want to learn a language, any language in the world, you start by learning the letters. Then you can put together a word, a sentence, a paragraph, and trading is no different. So I'm going to jump into the screen here and explain to you these candlesticks, because if you go on Google right now and Google candlesticks, you're going to find a lot of information. People will be telling you about 3 hanging soldiers, triple women crying, triple bottom and diagonal shapes. It's such a lot of confusing information, and in today's video I'm going to break it down for you. So without wasting any time, let's jump into the charts. Alright traders, before we jump into the charts, I made you a beautiful drawing here to help explain candlesticks better, because candlesticks are really important, guys, and I hope this helps you understand. Candlesticks, or Japanese candlesticks as they are commonly referred to, they just provide us so much information compared to the line charts or the bar charts. I don't know if people still trade the bar charts and the line charts, but candlesticks provide us so much information. But not only that, candlesticks help us provide specific rules in the market, which is also very important as traders. We can't just be jumping into the trades every time we feel like it. We need some rules to guide us in this market. We need some rules to eliminate any guesswork, so that every time we take a trade, we know exactly why we are taking this trade, and we're going to be taking the next trade the exact same way, day in, day out. But if you look on the screen here, we've got 2 candlesticks, 1 green candle and 1 red candle. The green candles are called bullish candles, and this represents buyers in the market. And the red candles are called bearish candles, and this represents sellers in the market. Now, at a glance here, traders, you can already see how important candlesticks are, because whenever we see a green candle, we can't be selling the market, because we know that green means buyers and red means sellers. So whenever we see a red candle, we should be thinking, whoa, we need to be selling this market, right? So before we get into the candles, when you look on the left here, we have different time frames. We have a 1-minute time frame, 5-minute time frame, 15-minute time frame, 30-minute time frame, 1-hour time frame, 4-hour time frame, daily time frame, weekly time frame, and a monthly time frame. Now, time frames are really important when we are talking about candlesticks, because this means if we are trading 1-minute time frame, this means each and every minute that passes, a new candle is gonna form. Now, depending on the color of the candle, this is going to tell us who won the battle on that session that we're going to be trading. Same example here, if we are trading the 1-hour time frame and we see a bullish candle, which is a green candle, we know that for the past hour, the buyers have been in control of this market here. And if we see the red candle, let's say maybe we are trading a daily time frame and we see a red candle, this means each and every candle represents a day, right? Every day that goes by, a new candle is gonna form. And depending on the color of the candle, if the candle is red, we know that for that particular day, the sellers won the battle. So this is very important to understand time frames when we're looking at candlesticks. Now, how do we read a candlestick, or what information can we get from a candlestick? If we look at a bullish candle is going to open at this level here, and it's going to close here. So not only can we see that a green candle represents buyers in the market, we can also see where did the market open, we can see where did it close. But what about these wicks here on the upside and the downside? Well, this wick here on the downside, this means that when this candle opened, before it pushed to the upside, before it was green, the sellers first took control of this market. So this means this candle was once red at some point. The sellers took control and they gave us a low here. So we have our low here, but there was too many buyers on this particular session. So this means the buyers came into the market and pushed the market all the way up to this high here. So this is our high. Now, before this candle could close, the sellers came into the market trying to prove something. They pushed the market down, but this is all they could accomplish. And this tells us that the buyers were in control of this particular session because this market closed higher than it opened. Now, vice versa, when we're looking at the red candle here, which is a bearish candle is going to open at this level here and it closed around this level here. So this is our close. But the wicks means that before this candle was red, when it opened here, the buyers first took control of the market to give us a high here. But the sellers were like, wait a minute, what are you trying to do, buyers? I'm not interested in pushing to the upside. There's too many sellers in this market here, and they pushed the market all the way to this wick here on the down, and they gave us our low. So in addition to our open and our close and our high, we also get our low here. Before this candlestick could close, the buyers came into the market and pushed the market up, but this is all they could accomplish. So looking at this candle here, we can see that the sellers were in control of this session here because the sellers won the battle, right? So the most important information that we get from a candlestick is our open, our close, our high, and our low. We get all this information just by looking at a candlestick. And in addition, we get to see who won the battle. Was it the buyers or was it the sellers? And we see that simply by the color of the candlestick. I hope this makes sense, traders. But looking at these candlesticks alone is not going to help us, right? It's not enough to make a decision. It's not enough for us to risk our hard-earned money just by looking at a single candlestick. We need to read this candlestick in conjunction with other candlesticks. So in other words, before we can make a decision to buy here, we need to understand what was happening before, what candlesticks came before this candle here, and at what point did this candle form here. This is going to make sense when we move into the next slide. So let us look into the next slide and see how do we read these candlesticks in conjunction with other candlesticks. Now, this is another beautiful illustration that I made for you here, guys. I've already explained that we can't be risking our hard-earned money based on a single candle. So, which means whenever we see a bullish candle, we should keep it at the back of our minds that this is a buyers controlled market, of course, but we can't just be jumping in and start executing a buy. We need to understand the story before this candle had formed, and this is what I want to explain. If you check here, the first pattern that I'm looking at is a bullish engulfer. Now, engulfer means covering the previous candle, right? If you check here, we've got a red candle. So in other words, this means this market was coming to the downside. There were other candles here. This market was coming to the downside. We reached an area of support. It's very, very important. If you don't know how to draw support and resistance, I've already made a video about that. Make sure you spend some time on my playlist, and this is going to make so much sense in a moment. But this means the market was coming from the upside, pushing to the downside. We reached an area of support here, and these support and resistance levels are very, very important. I call them key levels, but we reached a key level here, right? And we got a big bullish candle, cancelling the behavior of the previous candle. So whenever we see a bullish engulfer at an area of support, this is a huge indication that the market is about to change direction and push to the upside. So whenever you see this pattern at an area of support, there's a huge chance that the market is going to push to the upside. These are called bullish engulfer. Now, the opposite is true for the market that is pushing to the upside. It reached an area of resistance, another key area here. So we reached our resistance here and we got a big fat red candle. this is a bearish engulfer because it's engulfing the previous candle. So this means the bearish candle is bigger than the previous bullish candle, hence bearish engulfer. Whenever you see this pattern here, you can go ahead and execute a sell because this is a huge indication that the market is about to push to the downside. That's a bearish engulfer. It's just the opposite of the bullish engulfer. I hope this makes sense. The third pattern that I like looking at is this wick rejection candles. Now the bullish version of this is called a hammer candle, and a hammer candle, we often see these candles at an area of support. So same thing that was happening here, the market was coming from the upside pushing to the downside, and we reached an area of support here, which is a key level. And whenever we see this hammer candle at an area of support, we can go ahead and execute a buy because the market is about to push to the upside. That's a hammer candle. Now the opposite is an inverted hammer. Inverted hammers, we're going to find these candles at an area of resistance. So this means the market was pushing to the upside, we reached an area of resistance, and the sellers were like, wait a minute, I'm not interested in pushing up and breaking this area of resistance because this is a strong key level. I'm gonna go ahead and reverse to the downside. So whenever you see these weak rejections, which are called inverted hammers in the market that is pushing to the upside, then you can go ahead and sell the market because this means the market is about to reverse. Now this hammer and inverted hammers also apply in a trending markets, right? So if the market is pushing to the upside and we see a hammer candle here, if we see this bullish candle here, which is a hammer, this means that the market is about to continue pushing to the upside. So this is a huge indication that the trend is about to continue. Then you can go ahead and place a buy trade here, or if you're already in a buy trade, you can go ahead and double down on your position because this means the market is about to push to the upside. Same thing if the market is pushing to the downside and we see this inverted hammer here, this is a huge indication that the market is about to continue pushing to the downside. So you can go ahead and place a sell trade here because this is a huge indication that the market is about to continue pushing to the downside. So these are hammer and inverted hammer. I don't know who was giving these candles these names, guys, but this is so imaginative, right? It's just some catchy names, man, to help us remember these candles. But yeah, there you go. We find these hammer candles at areas of support, and we find these inverted hammers at areas of resistance. Whenever you see these patterns here, you must be very, very alert. But the fourth candlestick that I look for is called a doji candles, and some people call these spinning tops, but these are indecision candles. This means nobody's in control of the market here. The market can't decide what to do, whether the market wants to push to the upside or whether it wants to push to the downside. So these also are very important when they form at an area of support or an area of resistance. So whenever you see these spinning tops or these doji candles here at an area of support, you must know that the market is undecided and the next candle is very, very important. So if we find this candle here or this candle here at an area of support, these ones, the color doesn't really matter. As long as you see an indecision candle at an area of support or resistance, you must pay attention to the next candle. Is the next candle gonna be a big bullish candle? This means that we're going to be buying the market back to the upside if we find this big bullish candle at an area of support after seeing these indecision candles or these doji candles. And same thing goes for if we find these dojis at an area of resistance, we must observe what is the next candle going to be. If the next candle is a big fat red candle, then we know for sure that the market is pushing to the downside. Then we can go ahead and sell the market because it's about to potentially push to the downside. Now notice how I keep saying potentially because nothing's guaranteed in these markets, guys. Our job is just to execute our trades the exact same way day in, day out. And if you understand these patterns here, it's gonna change your trading so much. But these candles here are only important if they form in areas of support or resistance or just in key areas, especially these hammer and inverted hammers, because these ones we can also find them in a market that is pushing to the downside. If we see this inverted hammer here, then we know that the market is about to continue pushing to the downside. And same thing, if the market is pushing to the upside and we see this hammer here, we know that the market is about to continue pushing to the upside. Now, these candles are not easy to spot, right? Because they can just appear anywhere. So it's very, very important to note that they should be appearing in areas of interest. Let's just look at this thing in conjunction to everything that we've been talking about here to make sure that we understand everything that we've been talking about. Let's move on to the next slide. Alright traders, another beautiful drawing that I made for you guys here, and it took me a bit while guys to draw these illustrations for you. So if you are finding value in this video so far, please smash the like button and subscribe to the channel, man, because I really need you to understand this, because this really helped improve my trading. But this is what I was talking about. We've got our support here and we've got our resistance here. Again, if you don't know how to draw this support and resistance, I'm gonna leave a link to that video in the description. Make sure you watch that video after this one. But we can see here that the market was pushing to the upside, right? And it was approaching an area of resistance. And as we explained, do you still remember what this pattern here? A bearish engulfer. Come on traders, pay attention, man. So the market was pushing to the upside. We reached an area of resistance here and we have a bearish engulfer. Now, what do you think are we going to do? Are we going to be buying the market or are we going to be selling the market? If you said selling the market, and then you've been paying attention, so whenever we see these candles here, and then you can go ahead and sell at the close of this candle here, put your stop loss above structure, and you can target the next zone, right? Whenever we see a bearish engulfing pattern at an area of resistance, we know that we'll be selling the market. And as you can see, the market started pushing to the downside, and we got another pattern here. What is this pattern here? If you still remember, this is a hammer, right? If we find this hammer here at an area of support, then we know for sure, well, not for sure, but we know that potentially the market is about to reverse and push to the upside. So we can go ahead and place a buy trade here at the close of this hammer candle here, and we can benefit to this move to the upside. And the market reached our resistance area here. And what pattern are we seeing here? If you said dojis, then you are correct, traders. You've been paying attention. We see a beautiful dojis here. Now this can be just one doji, or you can find both dojis at an area of resistance here. But the most important thing is to observe what's going to happen next. And as luck would have it, we see a big fat red candle here, which is what we are looking for whenever we see these indecision candles. Because when we see these candles here, we must know that the market can't decide whether it want to continue pushing to the upside or it wants to reverse. Until we see what the next candle is like, then we are not taking any trades, right? And as we can see here, we saw a big fat red candle here. Execute a sell, stop loss above structure, and we target the next zone. When we get to an area of support here, we can see another pattern here. What is this pattern here, traders? If you said bullish engulfer, then you are correct. So we got a bullish engulfer here, and this is a bullish engulfer because this big fat green candle engulfies this mini red candle here, which means it's canceling all this behavior here. This is telling us that the market is not interested in pushing through this area of support. Then the market is going to be pushing to the upside. And as you can see, the market started pushing to the upside. So if you see this pattern here at an area of support, you can go ahead. You have my blessing to go ahead and place a buy here, a stop loss below structure, and benefit to this move here. If you check this candle here, this is a hammer, and I told you that these hammers can also appear at a trending market, right? So if you see this hammer here, if you are on this trade, let's say you took this trade and you see this hammer here, you can go ahead, double down on your trade, stop loss below structure, and target the next area of resistance. We go to our area of resistance and we got another beautiful pattern here. Can you still remember what this pattern is, traders? If you said invented hammer, then you are correct. This is just the opposite of this candle here, right, which is a hammer. This is inverted hammer. So if you see these inverted hammers at an area of resistance, then you have my blessing, of course, to go ahead, place a sell trade, stop loss above structure. Or usually when I get these inverted hammers and these hammer candles, I usually put my stop loss in the middle of these hammers. But this is not a strategy video. This is just to show you how I trade these patterns, guys. So whenever you see this candlestick here, which is an inverted hammer at an area of resistance, you can go ahead and sell the trade back to the previous support.